before we kick off and take a look at some of the market movers, let's just focus in on the equity market. We see it continually under pressure, but it seems that some analysts are saying that that 3,200 mark is still a technical level and the market will be able to rebound above that. What are your thoughts on whether the market is starting to bottom out yet?
Good morning. Well, I think that the market has still a lot of room for growth. When we look at 3,200 points, I don't think it's something which should worry us. And looking forward, I guess we had the same levels in 2010, and I don't think we'll see it go below that threshold.
Robert, let's focus in on some of the counters that we see rallying this morning. Williamson Tea is, when I last looked, up by 18%. The company, of course, declaring that special dividend with a 50 shilling dividend, which takes the dividend yield to 20%. Really attractive for shareholders right now to get a piece of that pie. What are your thoughts on that news flow?
That's one of the highest dividends I've had while in the industry, but I think it's reflective of how well the company is doing. Williamson Tea has been around for over a century. They have big farms in the Rift Valley province. They have a lot of potential for growth, and right now, if you're looking at the international tea prices, that puts them at an advantage. We have that at around $3 to $5 per kilo for black tea. As for the shareholder value, there's a lot to get from there. The problem now is Williamson Tea has very few shares in the market, about 8 million shares. So this may have a problem when it comes to supply. Not many will be willing to let go of a share which has issued 50 shillings for dividends. Exactly.
Are we going to start seeing agricultural counters listing more of their shares in 2012 to unlock value for Kenyans and shareholders who want to get exposure to the agricultural sector?
Well, that depends also on the particular companies in question, whether they actually do need to raise the capital by going public. I don't think we'll see something of that sort. What we may see rather perhaps is more of bonus issues, and we might have rights issues. But looking at the sector in general, that's the backbone of the Kenyan economy. Yes, the rains have been consistent in 2011. We expect them to be consistent this year. So I guess there's still a lot that can be drawn in terms of shareholder value from these companies, both publicly listed and those that are privately held.
Turning to the banking sector, I know that equity is your favorite stock in the banking sector, but Barclays Bank is starting to restructure itself in order to reduce its cost base. It's also had a bit of a management shake-up. What are your thoughts on the outlook for Barclays going forward in light of the fact that it has had this high wage bill, which has been a big problem for it in terms of costs?
I think they are doing the right thing. They actually let go of 200 staff members before in a bid to cut wage-related costs. And looking on, I think they're doing the right thing, and I think we'll see a lot in terms of wooing investors to move in to invest in it. For equity, on the other hand, again, why I pick it as one of my favorites is because you never go wrong with foreign investors. They normally tend to set the pace, and right now there's a lot of foreign interest in Equity Bank, a lot of demand from foreigners. There's a lot of investment in the company, and there's a lot of expected return on investment on that. So going forward, I would put these stocks at a very high risk premium, and I would actually urge any investor to consider them as one of the financial picks.
Let's take a look at the brewery sector. Diageo, of course, is the parent of East African breweries and reporting some strong organic growth in East Africa yesterday. You look at that revenue growth, it's up 26%. Sales of Tusker, which is of course owned by East African breweries, was up by 23%. Are we going to see Diageo putting more focus on East Africa right now and offering more support to East African breweries in order to counter the competition from SABMiller?
Yes, I guess that would be the most sound strategy at this point in time, where they have more or less saturated the Kenyan market. It's a mature company locally, and I think the only way they can increase to their revenues is moving out, moving regional. And right now they face a lot of competition from some players like SABMiller, and I think it's a good move for them to try and focus on other opportunities outside Kenya. Another thing which maybe you would like to mention maybe is the fact that they are cutting their operating expenses. They are moving into sorghum as an alternative to barley, which will actually be used for the low-cost brands. And I think this will also be a way of increasing their organic growth, both locally and regionally.
And of course, focusing on the low end of the market, what are your thoughts on how the competition is going to pan out on that end of the market, with SABMiller also positioning itself to cater for low-income earners?
Competition always normally plays in favor of the dominant player. In this case, I guess East African breweries are the dominant player. So Diageo have the upper hand when it comes to the local market, because locals will always go for a brand they are familiar with. This notwithstanding, I still believe the competitors have a significant mark to leave, and I don't think the company should sit back and depend on the goodwill that comes with its legacy in Kenya. So I would say the effects would be felt more in the long term if indeed these competitors actually manage to pull through and breach the Kenyan market.
Let's just quickly focus in on East Africa. We have talked about the growth opportunities there and the position taking by companies. SABMiller's just doubled its capacity in Uganda right now. That's what East African Breweries did before. What are the opportunities that you're seeing in the Ugandan market with regards to beer? Because clearly SABMiller and both East African Breweries are seeing strong growth potential there.
Yes, I think the potential does exist. Uganda has always been one of the major export markets for our local brand, that is East African Breweries brands. And I think moving in to Uganda, SABMiller do want to put pressure on their major competitor. And I think this may be a talking point for the marketing department of East African Breweries. And I guess the market is there. Now what has to be laid on the ground is the actual implementation of the plan they have underway.
Yep, but as you say, the implementation of that, but the battle zone is, the battle war for the beer market is, of course, fierce right now. Robert, we'll leave it at that for today. Thank you very much for your time. Robert Munuku, dealer and analyst from Francis Drummond and Co.